Hi everyone, hope you all are doing good. Welcome to the second video of the series on Canadian Dividend Investment. As I mentioned in my first video, we are using this platform to perform a case study on how we can generate a second income. The motto here is, make your money do the work for you. And for this, we are using the passive dividend income approach. We are using WealthTrade as our trading platform for this case study. It's a commission-free trading account, safe, and also very user-friendly tool. So today, we will look at the investments that I have in my portfolio. We will also buy some stocks today. So let's go ahead and check my portfolio. As I mentioned in my first video, I started this portfolio 3 to 4 weeks back. I put in $500 in the month of January and $500 in the month of February, and I'm going to do that continuously. In this portfolio, I have 3 investments. We'll look at each investment one by one.
So the first stock that I have here is like Canadian National Railway. CN Rail is a class 1 railroad. It's been there in the market for years. It's the number 1 railroad in Canada. They are not that favored from a dividend perspective, but this is a very stable stock. It can be considered as a blue chip category stock. The reason I bought this stock is not because of its dividend, but the fact that it's a very stable stock, and then there is a growth potential for this stock. I want to slowly buy into this stock. Right now, I have only 2 shares, but my plan is to build my portfolio with this stock as well. I may be planning to buy 1 stock per month or per 2 months. Look, if you look at it, it's a little bit pricey, so I may not be able to buy it every month, but definitely I'm gonna build my portfolio with this stock. So when you talk about CN, like the other company that comes into mind with the same category is CP Rail. They are also not a dividend oriented stock. I rate CP higher than CN. If you look at the last 5 years, the growth of CP has been really good. Um, if I was putting more money into my investment, then I would have preferred CP over CN. CP stocks are like, say, $400, like 430 plus, I believe, and I'm putting just 500 months per month, so I don't think that will work out for me. But the good news is that there is a news that CP is planning to split the stock 5:1 in April. If that happens, then yes, I may buy a couple of stock after April. Um, let's see how that goes. But currently, I'm sticking to CN, and as I mentioned, I have 2 shares. The average price is pretty good. The performance of this stock is good. So this is one of the stock that you will definitely see increasing in my portfolio. But this is not the stock that I'm gonna buy today. The second one I have in my portfolio is a REIT, which is a real estate investment trust. This is Rio-Can, and I wanted to diversify my portfolio, and REIT is one where I want to invest a little bit. I'll not be investing like more than 3 REITs. So I selected this one as one of the REIT that I think would be good for me based on the dividend as well as the growth. If you look at it like from a 1 year perspective, it's been like down, but that was like expected from almost all stock, like because of the COVID, and then this is a real estate investment, so definitely it'll take some time to get back on track. But gradually it's been going up, and I believe once all the restrictions are over and we kind of return back to normal life, then this is gonna increase. They have a good dividend as well. They have cut the dividend recently, but still at this price, I would like to buy this share. And I'm hoping that it's go up, but if a new lockdown measures comes into effect, we can again see that it will go down. So there is a little bit of risk on REITs, but um, I'm hoping that it will go up, and I'll keep on buying some stocks on this one for sure. So on a Rio-Can, on a like generic overview, like it has a diversified portfolio of retail as well as mixed use properties, a mainly retail focus, but also has offices, residential render, development properties, etc. Its tenants are like one of a lot of big companies like Costco, Canadian Tire, Walmart, Loblaws, like BMO, Best Buy. So there's a lot of companies. So currently I have 5 shares in my portfolio. um, it's going up since I bought it, so that's a good sign. The third stock I have is a ETF. It is from iShares. It's called XIU. Um, I wanted to buy certain ETF as well in my portfolio. The reason is like I would be buying mainly individual shares, but that doesn't mean that I would be buying all the top shares that we have in TSX on TSX. So I would like to get ETF into the picture so that they can actually track the other stocks and will give me some dividends and growth as well. So if you look at this particular ETF on their website, I'm more interested on the holdings of this one. So if you look at it, like these are the top 10 holdings, and most of them are financial, and then the usual suspect like Enbridge, TC Energy, etc. Most of the some of the stocks, like, yes, I am interested, like TC Energy and Bridge, Nova Scotia. These are the stocks that I may end up buying as well. But if you look at it, there is Shopify, Canadian Pacific, which already talked about, Royal Bank of Canada, which is like more of even CN National Railway. Like, so those are like more costly stock, and I'm pretty sure I'm not gonna buy Canadian Pacific or Shopify at this rate that they are trading now. So in order to have an ETF that has considerable amount of portfolio percentage of these stocks would be a good idea, and that is the main reason why I selected XIU over other dividend oriented stocks like VDY, say for example. But I'm interested in VDY as well. But first investment, when I selected the ETF for the first investment, I went with XIU because of that sole reason. So that is also doing good. I have 5 shares, but as I mentioned today, we are not going to buy an ETF. So what am I buying today? The first one is BCE. So this is the Bell Canada. It's a telecom stock, and they are like they have really good dividend. And if you look at it like Rogers, TELUS, or BCE, Bell, um, all three are like good stocks to have. Um, I was like more on like buying TELUS versus BCE, but I felt like BCE would have a better growth opportunity than TELUS. So, and also the dividend is like very promising one. So my aim is to buy this one, and I may buy TELUS some point of time, but this would be my step towards diversifying my portfolio. Like, as I mentioned, I don't have a telecom oriented stock on my portfolio, so I want to go for one, and I thought this would be a right choice for that. Currently, it's like 55.51. It is a good price. Like when you look at it, like from 1 week perspective, as well as from like say a month perspective. 1 year is gonna be like we all know how COVID was impacted. So even from a 3 month perspective, it went down, but it has a growth potential of like going back to um, how it was before the COVID hit. So I would say like this for me personally. I think this is a good time to invest into this one. So let us buy something with the money that we have right now. Well, one of the drawback of Wealth Simple is that it doesn't show you the real market price. So it may be like 15 minutes delay in it. So let's go ahead and see go with the limit buy option, and I normally check Yahoo, and it shows like 55.53 now here, and it's 55.51 here. So what I'll do is like I will give the price of like 55.50 just to give a rounding it up. So let's see, I'll put like one, two, let's say we'll go for three. So I'm actually gonna put three quantity of this one and put it for buy, place order. So that's it. So let's see how it happens, whether it gets filled or not. So we went back to the portfolio just to refresh and see what happens. I can see that the share has been executed here. Now the next one. So the next one, what I'm planning to do is I'm planning to buy another REIT, and this is Smart Sender. So initially when I bought Rio-Can, I was considering smart centers as well, and I was like confused on which one should I buy, and I because of the price at that point of time I bought in Rio-Can, but smart centers is always there in my mind. That would have, I also always decided that that would be my second read. And if you look at smart centers, they are also just like Rio-Can. They mainly are retail oriented. They do have Walmart and other big customers as their tenant. And from an investment perspective, Smart Center is a little bit more stable than Rio-Can, and they have a good dividend yield as well. So yeah, so I'll be buying a couple of more shares of this one. So it's showing us 23.99 here, but if you go in, it's showing us 23.94. Okay, so that's a good price to buy in. So let's do it. Let's do a market or limit buy on this one, and I'll put it as again like 23.90, say for example, a little less, and I'm gonna give one, two, three, let's say five shares for this one. So that's it for today. I have bought two stock. Hopefully two, like one is definitely there. The other one, like I'm hoping that it will go through. So that's it for today, guys. We'll have a video soon on the status of the portfolio, and also if I'm buying something next week, I'll definitely include you in that. So for time being, stay safe. Bye.